On this platform, there are already many videos here that cover financial crisis, but frankly, they are boring and for history nerds only. Let's be honest, watching people losing their life savings is pretty hilarious. Unless you are the one at the end of the stick. In this video, I selected 5 different epic stock crashes and ranked them in a tier list by their severity, length, and just generally how funny they are. Let's begin. First on the list, we have the good old classic 2008 financial crisis. It all started because banks in the US thought it was a genius idea to issue home loans to people who had worse credit ratings than drunk college students who are always high on weed. The term is called subprime mortgages. This is actually quite a good deal for banks. They can charge higher interest rates and then bundle these trashy loans together to be sold as high-grade investment products to other investors and lenders. Something like a CSGO loot box, in which investors around the world gobble them up like free samples at a department store. Because rating agencies were slapping AAA stickers on them like Mr. Beast giving away cars. But there's a slight issue. People with poor credit ratings actually started defaulting on their loans.
I declare bankruptcy!
Shocker, right? Turns out giving a $500,000 loan to people with credit score lower than their bowling average score wasn't really that sustainable. Lehman Brothers, a massive investment bank, was one of the largest victims. They were balls deep in subprime mortgages. The company were lending almost $50 billion per month. By 2008, Lehman had assets of $680 billion, supported by only $22.5 billion of firm capital. An extremely risky position. When the subprime mortgage bubble burst, they collapsed overnight. Imagine showing up to work and finding out your $60 billion worth employer is now worth less than a local 7-Eleven. Soon enough, the stock markets went full skydiving mode, with the SPX dropping 39% in a year. People lost homes, jobs, and life savings. Governments around the world had to step in with massive bailouts. Hey, how come nobody bails me out when I spend my life savings betting on Greyhound racing? Back to the tier list. This is the definition of a financial collapse. It lasted super long and so many people lost their jobs. This is obviously A tier. Next, we have the dot-com bubble back in the 2000s. Back in the old days when the internet isn't dominated by 2 websites only and everyone owns a flip phone stronger than Nagasaki's Fat Man, Wall Street had discovered a shiny new toy, the World Wide Web. If you were an online company and you added .com to your name, your stock price went up so fast that makes Tesla look amateur. You could have started a website, smellyusedsocks.com, and still receive a valuation bigger than medical firms solving cancer. Mark Cuban sold his company Broadcast.com for $5 billion to Yahoo when the company actually lost $16 million the year prior. The nasdaq skyrocketed. It more than doubled between 1998 and 2000. Everyone thought it's free money and jumped on the bandwagon. Except the fact that it wasn't. Oops. Turns out, you actually need to make money to be worth something. Who knew? Stocks started crashing. The hottest IPO, Pets.com, went from $11 to less than a cent within a year. Over $5 trillion in market value evaporated, with thousands of companies disappearing. It was like Thanos snapped his fingers all over again. Investors went from, I'm going to retire at 30 to, I hope Costco has a good return policy for my $10 t-shirt. The dot-com crash was quite spectacular, but it was mostly limited to the tech industry. For this reason, I will give it a B tier. Let's go back a bit in time and enter the black and white era. It's the roaring 20s. Jazz was hot, racial segregation was hot, and Wall Street was the hottest of all. See, back then, you didn't need money to invest. You just buy everything on margin. Economy is booming, and people had the belief that stocks would always go up. Wait, kinda like how we do nowadays, 100 years later. The stock market at that time was kinda like a pyramid scheme on a global scale. Despite alarming signs of unemployment rates and increased levels of debt, people just kept buying. Eventually, it reached the triggering point on a horrible day called Black Thursday. Big shareholders realized that prices could not continue to rise and began to get rid of their holdings, caused share prices to tumble, further encouraging others to dump the shares as well. As a result, everyone rushed to the emergency exits, and the market hit their own Titanic iceberg. Dow Jones lost 23% in 2 years. It took the market 25 years to recover. The Great Depression impacted the whole world and gave rise to extremism. In particular, a failed artist from Austria, which caused a slightly inconvenient global event that took away 50 million lives. The Great Depression was the worst financial crash of all times. It was horrible and the most depressing of all. Undoubtedly S tier. Well, that was depressing. Let's get ourselves into a more colorful mood and enter the future of the COVID-verse. In March 2020, in a city of China, a tiny harmless disease was spread out, later called the COVID-19. This small sickness killed 7 million people worldwide and similarly murdered the global stock market as well. It was like the Black Death 2.0. In just 33 days, the S&P plunged 34%. Airlines dead, hotels ghost towns, oil prices went negative. People worked in their homes and it was the introvert's wet dream. People looked at the bright red indicators, which gave them PTSD from the 2008 crash. Everyone was like, is this the end? But then the market said, psych! Central banks swooped in with money printers hotter than a Twitch's Just Chatting page. Stimulus checks flew in, interest rates hit zero, and suddenly stonks exploded. And we entered one of the best bull market in recent history. That 33% drop? Nobody remembers it after a week. COVID crash? Nah, it was a glorious stock rally. This was hardly a financial crash at all, more like the cheap Black Friday discount. Seats here. In 2025, Trump defeated 2 women in a row and came back to take the White House throne. Perhaps he was inspired by the recent horrible Disney remakes and decided to make his own crappy reboot and reactivated his tariff machines to protect the American industry and show who's the maddest boss around. Electric vehicles? Taxed. Laptops? Taxed. Cheap knockoffs toys of your favorite character? Taxed. But there's one small issue. We live in a globalized economy, so while the tariffs were supposed to hurt China, they ended up hurting pretty much everyone else too. American companies importing parts from China, yikes, consumers paying more. And China didn't just sit there quietly. They fired back with their own threats going as high as 125%. Global supply chains just barely recovered from COVID started looking like a horror movie plot. But hey, as I am making this goddamn video, this stock market actually went back up because somebody got scared and backed up, and the stocks recovered within less than a week. I bet somebody in the White House got a sweet deal on the stocks. This is a joke of a crash. T tier for Trump. So that's pretty much it for my stock crash tier list. If you haven't noticed, this is the first video of the channel. If you like this video, please subscribe.